Without further ado, let's welcome Sanjeev Chib from Moneris.
Great. Thanks, Obio. Good afternoon, everyone. It's always a challenge to be the last speaker standing between a person and their lunch. So I'll try to keep this interesting for you, and thank you for giving me the time to present this to you. Yeah, skating to where the puck is going. So for those of you, and I recognize a few faces over here, but for those of you who were at the conference in Washington a few weeks ago, Silvio was talking in his closing remarks, and in fact, even today morning, he mentioned about skating to where the puck is going. And I thought that's really interesting. Every business needs to focus on skating to where that puck is going if they're to make sure that they're aiming in the right direction. And so when I thought about, and when Silvio asked me to come and present over here, I was thinking about what value can I add to this conversation for you guys. I thought about perhaps we can focus on where things are heading, where are the trends, but I'll try to take it and provide a slightly different perspective. So rather than looking at it from a consumer's point of view or an issuer's point of view, I'll try to focus on it from an acquirer standpoint, as well as, more importantly, from a merchant standpoint, and taking it one step further from a marketer standpoint, because if you guys are creating some sort of an ad platform, you really need to understand from a marketer's point of view, what are they thinking? What are their expectations? What are their problems? So maybe through this, it'll give you some ideas, one or two. That'll be my goal. Maybe it'll give you some pause and some things to consider, which is what I'm trying to achieve today, and that's great. And I'll also share with you some statistics that we managed to put together. So just before I jump in, just in terms of background, I sit in kind of a unique position at Moneris. As you know, Moneris is the largest payment processor in Canada, and my role is to head up a team around the data insights piece, which means that I do get visibility into consumer spending trends and where consumer behavior is moving. And I'll try to share some of that with you today. But in addition to that, we launched recently a product in Canada. It's called DCA-CardLinx. And it's something that we invented at Moneris, and it basically sits at that intersection between digital marketing and payments data. And it's a product that's meant for the marketers out there to help them measure the effectiveness of all of their marketing channels to in-store sales. And it does that without requiring consumers to take any action, such as redeeming offers or things like that. And it also does that without requiring any personal information of the users itself. Through that product, and I'll share with you what that product is towards the end of this presentation, but through that, it's allowed me to get perspectives as well as to understand the problems of the marketers, and I'll try to share some of those with you as well today. So just to get started, you're all very familiar with this picture. It's just a quick summary of all the players that are involved in this space. So of course, you've got the consumers and the merchants in the card linking space on each side. And as Darby mentioned earlier, scale is really important. In order to be successful, not only do you need enough customers on those platforms itself, you also need a lot of merchants in there who are going to give those offers to make it attractive for customers to come. And that's part of the challenge with having these ad platforms, is that if you don't have both sides of the equation running, it can fall pretty quickly. And so you've got lots of players that are involved in it. Of course, there's the card issuers. And for card issuers, card linking is very attractive because it allows them to differentiate. And I think Paul mentioned that it's getting harder for card issuers to launch, to take up or create new reasons for card holders to take up new cards. And so they're looking for benefits to provide through their cards. In doing so, card linking is excellent because it creates that benefit for their card holders, and at the same time, it's funded by someone else. It's funded by the merchants itself. So if for a card issuer, it's really important for them to understand where that puck is going, not just for the customer, but more importantly, from a marketer's point of view. Because the merchants will say, well, why should I keep funding those awards? At the same time, you've got the tech platforms as well, the CardLink platforms and the data analytics people who are providing that. And a lot of the card linking platforms today are what we call in the marketing space affiliate networks, where you're basically a platform that is driving traffic, driving customers to a merchant's either store or a site. You're earning your revenue through some sort of a commission from those merchants, and then perhaps you're getting either points or some sort of a cash reward back to the consumer itself. And so if you're an affiliate channel, you really need to understand that you're just one of several different channels that are available in the tool belt of a marketer. And I'll touch on that a little bit later and show you what are the different things that marketers look at and where does affiliates fall into that picture itself. And then you've got the acquirers like Moneris. And I'll touch on how do we think about payments data, how are we helping our merchants, because it's really important for us to understand where that puck is going. We need to understand what are the problems of the merchants, as well as their customers and where the spending trends are. So why don't I get started? And I thought I'd start with showing you, so I'll be focusing mostly on consumer spending trends and with the merchant's perspective and marketer's perspective. But to start with, let's look at some of the spending trends for consumers. So I went back and pulled out some of the data and did some research around what do we see in terms of where consumer spending trends are going this year. Now, a lot of these are not new, and I bucketed them into certain behaviors, 3 in particular: speed at checkout, shifting delivery models, and payment convenience. So although these are not new trends necessarily, what we are seeing is this year there is an amplification of some of these, and it's really moving faster this year. So to start with, looking at speed at checkout, we are finding that consumers are getting more impatient at the checkout counter. I mean, you see that at convenience stores, you see that at quick-serve restaurants, where now they've got the automated kiosks, and customers want to be in and out really quickly. I mean, Amazon's taken it to a whole new level where they've totally got rid of the checkout as well. But you also see that with the way they're paying. So even with contactless, the tap and pay, this year as compared to last year, we saw over a 25% growth in volume on contactless. And now more than 50%, so 52% of all card-present transactions that are taking place at stores are contactless transactions. And that's a clear indication that customers just want to tap and pay and then leave the store. So from a card linking perspective, you guys are aligned really well with this, because if you can link that offer directly into the card, that aligns very closely with that behavior of what the consumers are looking for, which is a very positive thing. The other trend we see is shifting delivery models. And this is actually a really interesting scenario. So on one side, you've got restaurants that are what I call moving from offline to the online. Traditionally, restaurants have always been operating in the offline world. And now when you see these new food delivery apps, such as Uber Eats and Skip the Dishes, they're really changing the whole model of moving people to buying, not just ordering through these online channels, even the payments are online. And when I was down at the Washington conference a couple of weeks ago, it was really interesting because one night I was at the Hilton and I was in the lobby, and I must have been there for about 10 to 15 minutes. And in those 10 to 15 minutes that I was standing there, I must have seen at least 4 or 5 different food delivery cars pull up and deliver dinner to guests staying at the hotel, because there wasn't a restaurant within the immediate vicinity over there. And I was wondering, what is that going to do to the restaurants that are in the hotel? Here you've got these new services that are completely disrupting the restaurant business within these hotels. And it's a huge growth area. In Canada, you're seeing a 44% growth rate year over year within these food service areas. So the question to you, if you're operating an independent CardLinx or an offer platform, the question to you is, are they going to disrupt you? And are you going to compete with them, or are you going to play with them, and how will you play with them? Because remember, these guys already have a platform. They already have the merchants. They just simply have to create a method to push offers to their users. They also have the cards on file. They have everything they need. And if they aren't already building this or doing this, they will very soon. And so the question for you to think about is, how will you play in this space? Because you've got Uber Eats and Skip the Dishes here in Canada that are growing exponentially every year. And we're seeing this shift. But here's the other side, and what's really interesting is With retailers, we're actually seeing the opposite. We're actually seeing online moving to offline. And what I mean by that is you're seeing this huge surgence of buying online but picking up at the store. And I know in the US, this has been around for quite a while. In Canada, we're a little slow, so we finally caught up. But you are seeing a huge increase in that. And you know, year over year, like we now have at least 1/3 of retailers. And I would say if you're looking at national retailers, the vast majority of them today are offering buy online and pick up in the store. Some are even using it as a revenue channel for them. Take IKEA, for example. I noticed a few days ago that IKEA charges $5 for picking up in the store, which is it's a great new model for them as well. This actually came to my attention about a year ago when what happened here in Canada is Canada Post, which is our equivalent of the delivery service that you have in the US, Canada Post went on strike. And they went on strike exactly around this time, which is just before the busiest shopping period of the year, which is Black Friday and Cyber Monday. And so just as an aside, what we're seeing in terms of the spending data is that Black Friday and Cyber Monday beat out Boxing Day. It's more busier than Boxing Day itself, and we're expecting the same this year as well. And so when Canada Post goes on strike, the question for retailers are, how on earth am I going to deliver all those Cyber Monday sales that happen on our website? And they had to completely rethink their strategy and start offering the pickup on store, and so pickup in the store. And so we're seeing since then a lot of merchants are implementing that feature within their sites. Most have already done that. A lot are still moving in that area because you have to build a whole infrastructure for that as well. And it's not just, I mean, it's retailers. You're seeing that with convenience stores. Walmart's doing it. Everyone's moving in that area. The one question that a lot of these merchants asked us, though, is that a lot of those payments now are actually card-present payments because they're not taking the payment online anymore. The person pays when they pick up the item. And so the question for them was, well, how do we measure those promotions that we're doing to push people to pick up in the store? Can we measure the effectiveness of those promotions to the in-store transaction itself? And through Offlinks, they were able to do that, and that was an advantage. Again, I'll show you Offlinks a little later. And then the last trend, which is around payment convenience itself. No secret that you've got all these wallets. Sylvia, you mentioned about Apple and how Apple is working with Uber as well. And so what we're finding is that 1 in 5 Canadians today are using their phones in order to make payments itself. So no surprise that usage of phones as a way of paying is really important. And you know, Silvio, I'm shamelessly taking some of your survey results, but 41% of the respondents to your survey said that having card-linked offers built into these mobile wallets is the best opportunity that they see going forward. I'll tell you that some of them are already doing it. Alipay already has the ability to offer coupons and promotions of their merchants through their wallets itself, and so it's definitely coming. Again, question back to those of you who have this platform is, how are you going to play in this space? Are you going to compete with them, or are you going to play with them, and if so, how are you going to do that? Okay, so now switching gears and looking at it more from a merchant or marketer's point of view, which is my favorite area, because as Moneris, we tend to have our relationships directly with the merchants and the marketers itself. And so for us, understanding their expectations and their needs helps us to design new products for them specifically. And one of the things that we've seen over the past few years is the trend around budgets for CMOs, the chief marketing officers, has been going down. The growth, the annual year-over-year growth in their budgets is declining, which means that CMOs, and they've told us this directly, is that every year CMOs are under a lot more pressure to deliver more with much less resources. So they're still expected to deliver the same amount of sales and revenue for their business, but with a lot less dollars to spend across all of their marketing channels. Which means that they need to make sure that they squeeze out the maximum value out of every dollar spent on these different channels itself, including any offers platform or ad platform. that's there. And so the question really becomes around measurement. And what we are seeing is that the investment that they're making on marketing analytics platforms itself is increasing because they need to really measure how effective these are to make those critical decisions and maximize and optimize their spending. So in terms of the marketing mix, we do have a lot of different channels that are available in the tool belt of these marketers. And I pulled this from Offlinks just to give you a sense of what are the different channels that we're seeing marketers use and how big are they. Now, this is based on, just to give you a caveat, this is based on traffic that's being driven to their stores. But what you do see here is interesting. Search by far is the biggest channel that marketers use, both paid search as well as organic. So they spend a lot on search engine optimization because organic search does drive a lot of traffic to their stores. And even, I'll tell you now that in terms of effectiveness of those channels, they are very effective at driving not just online sales, but even in-store sales. And we've seen that. For those merchants that do have a very strong brand presence, we do see a lot of people going directly to their websites, and there's a lot of traffic generated. Email was a bit of a surprise for me. I always thought with junk mail and spam, it won't be a very effective channel, but we actually see that email is very effective at allowing merchants who have for them to reach their loyal repeat customers and to drive offers and promotions directly to those customers. And it does drive a lot of traffic to their site and a lot of sales, it was a surprise to me that it was bigger than some of the other channels. Social media is a growth area. That is something that the marketers have told us that they are investing a lot more on. And so I'll just say that even though this is showing social media at 5%, I would argue that this is probably larger if I layered on top of this the impressions and views, because a lot of social media sites, take Facebook and Instagram, they always claim that, well, nobody ever clicks on our ads, they just see it and it builds awareness, and then that's what drives traffic. It's questionable as to how effective just seeing an ad is in terms of influencing the actual purchase, and that's something that we are working with various platforms on measuring. But if I was to layer impression and views on this, they probably would be a bigger piece of this pie, probably not as big as search today. And then it comes down to affiliates. So what we find with affiliate channels and affiliate networks is it is an important channel for a lot of retailers. But it isn't the biggest. And so if you're a CardLinx platform, you are competing with money that's being spent across all of these other channels itself. And so you have to be able to really convince a marketer as to the benefit of your platform and why they should invest in your platform versus using some of these other pieces of it. So let me just dig down a little bit more into the affiliate side. And let's just look at sort of the good parts of it. And it definitely, in terms of coupons, discounts, as well as affiliate platforms and the marketer's point of view and the way they're thinking about it, is it definitely drives awareness. It definitely drives net new business for them. And it also encourages new product trials and to take up these new products. And if you are a commodity business, if you're a bubble tea place, for example, these coupons and discounts would definitely drive repeat business as well. So those are the positive aspects of it. The areas of concern for them, I won't say negative, I'll just say it's an area of concern, and what they're thinking about is if they're not a commodity business, if they're a merchant that wants to try and build brand recognition and brand loyalty, the question for them is giving out coupons every single time and giving out discounts every single time really building that loyalty for them. The other thing that's really important for them is the attribution of the benefit itself. It's no point if the benefit is being attributed to an issuer or if the cardholder is getting or the consumer is getting that benefit through a statement credit at the end of the month. If merchants are going to fund these different offers and discounts, they want to make sure that they get attributed as the primary giver of that benefit. It's not going back to an issuer. I'm just saying this from a marketer's point of view. And that's probably why they're a little bit reluctant when they see this, where if it's a platform that isn't giving the instant gratification at the point of sale terminal, for example, and it's going to be after the fact, or it's through another platform, even if it's through cashback rewards, then the question is, well, am I, as the merchant, getting that attribution of the benefit itself? And then the last point touches on something, Sylvia, you mentioned earlier, that Canada is a very different place than the US, in the sense that we do have a concentration of businesses here. So you take any industry, whether you take airlines, you've got just a handful of major carriers, or you take the banks, we've got, what, 5? And then you've got, oil and gas, you've got maybe 5 different gas stations. So any industry here in Canada, you've got a very small handful of merchants in there. What we've heard from them is that while they may want to participate on these platforms itself, they want exclusivity. They don't want to be competing with any of their other competitors on that same platform. Unfortunately, what that does is that it limits then the number of merchants that are on there. And I'm talking about the large merchants on those platforms. And if it limits them, it sort of goes against the whole model of scalability. And you really need scale for this. Which probably means that you need to also go downstream and look at the smaller, what we call independent businesses, to provide those offers, which is a good thing, because then you can provide more localized offers. But with the big players, they tend to want exclusivity on these platforms. Some other things that they think about is the financial aspect of it. There are some key metrics that marketers look at. I've only put 2 here. There are actually many more than this. But one key metric they look at is the customer acquisition cost. What is the cost of acquiring that that consumer? If you're not a commodity business, and if you're willing to spend more on a new customer, but in terms of repeat customers, you don't want to keep paying the same amount each time to keep getting back that same repeat customer over and over again. You would expect over time that cost to acquire that customer goes down. And so it also touches on the net lifetime value. How much revenue is a customer bringing in over the life of that customer relative to the cost of bringing them in? Is it positive? And more importantly, how do these metrics compare against all those other channels I just showed you? Is this the most effective one? Another metric they look at is the conversion. How effective is this channel at converting customers relative to search or social media or some of those other channels, or email even, for that matter? And is this the best use of our very limited marketing dollars? Because we want to optimize how much spend we have. If you're a CardLinx platform, these are the things that you should be considering and thinking about in terms of convincing a merchant as to why they should invest in your program versus some of these other channels itself. And so the last point is around measurement and multi-touch attribution. So we'll go back to the fact that marketers are now investing more on analytics platforms themselves. And what they're looking for is a comprehensive return on their ad spend. They know that, and this statistic hasn't changed much in the past few years, but only a small percentage of sales happens online. The vast majority of sales still happens in the store. And it's surprising, because I know how things are pushing towards e-commerce and online, but when we look at the data, I think the last time we looked at it, it was still about 92% was in store, and only 8% was online. So you still see a lot of people who are going to websites just researching, but they don't actually buy online. They'll still go into the store and make that purchase. The problem with a lot of marketing analytics platforms is that they're really very limited to just measuring the online sales piece of it, and they're missing out on 90% of the transactions. Card linking is great because it allows them to open up that picture. But what I will say is that, which is the second point, which is around attribution across all channels. Earlier it was mentioned about single touch attribution, and I will say, just like in hockey, when someone scores a goal, it isn't just that person who scored the goal. There's usually other players who assisted. And it's the same with marketing. And with marketing, it's never just that one touch point. It isn't just that offer that influenced the consumer to make that spend. Usually there would be multiple touch points before that. And what marketers are really looking for is a multi-touch attribution model. It's why when we launched DCA-CardLinx and designed DCA-CardLinx, right at the start, we threw out single-touch models, and we decided to go with a multi-touch attribution model. I won't go into the technicalities of multi-touch. There are many different models out there around multi-touch attribution, but if your platforms are simply providing metrics based on a single touch, it won't cut it today. Marketers are looking for that multi-touch attribution. They want to be able to measure it across all channels. What it also means is that the dollar amount that gets attributed, if it's a multi-touch attribution, you probably will have less of that dollar amount attributed to your channel, which means your net lifetime value just went down relative to the other ones. So those are things to keep in mind. Now, in terms of how they actually connect to the actual transaction, there are actually lots of platforms out there today that are trying to solve the same problem of measuring online activity to in-store sales. You know, you've got platforms out there that will take an event like an ad or an offer and try to correlate that based on time to the sales and see whether there was a lift in sales. It's not a direct link to the actual transaction itself. So it may come with certain inaccuracies or assumptions that that lift in sales was caused exclusively because of that campaign that was done. You've got other platforms or programs out there where they simply measure based on your phone and whether the person walked into the store or not, because based on location services. It doesn't actually connect to the actual transaction. It just makes assumptions that a certain percentage of those people who walk in the store must have made a transaction, and it gives metrics around that. Again, marketers are getting a little bit suspicious of those. The accuracy of it is questionable. And then you've got CardLinx programs, which are good because you're now linking it directly to a transaction itself. You know, with DCA-CardLinx, we took it sort of slightly broader because we didn't want to just measure a single channel. We wanted it across multiple channels. And again, we're linking it directly to the transaction itself, the in-store transaction itself, because we know that that's what marketers are really looking for. And then finally, the last point is around localized measurement. You know, what they're looking for is right down to the store level. Can you tell us what channels are driving traffic to the stores? Because it does differ, and we've seen that with DCA-CardLinx. It's based on many factors, things like demographics of an area. You know, certain areas that may be located in a university town, you may see certain channels like social media or Instagram, as well as email campaigns being the key drivers of store sales. Whereas in other areas that are more urban areas with a different demographic, it might be search that's really driving it. Marketers really need to know that at the localized level because they're designing their campaigns now at the localized level. And they need to understand that in order to understand that customer journey and then know in which order they need to advertise to drive that traffic into the store itself. So lastly now I'll turn to how we think about data and how Moneris, as an acquirer, thinks about using our payments data to help our merchants. And this is something that we've been doing for the past, it's relatively new, and I say relatively in terms of the last maybe 5 years. My background was I was actually head of audit, which is a completely different field. And I switched over to this area, and essentially the mandate that I set out right at the start was how can we take all of this massive amount of payments data that we have and create this value for merchants that goes beyond payments. I wasn't interested in creating another payment solution. There are lots of them out there. I wanted to go beyond payments. And so from that standpoint, we do work with a lot of clients on a variety of products. We use our payments data for things like working with a city, with cities. So we work with the City of Toronto, for example, to help them measure economic impact of certain projects that they did here, like the King Street pilot, where they shut down all the traffic on a street, or the Bloor Street project. Or we've worked with the city of Winnipeg on the Jets games and looking at the economic impact of certain street parties that they would do with the Jets games. So those are really interesting, cool projects that we did. We do tourism spend, where we work with tourism organizations to help them understand where are tourists coming from and where are they spending their money in Canada, which type of industries, how much is the average purchase size, things like that, so that they can better market Canada to the world itself. But looking at specifically around marketing intelligence, within marketing intelligence, that's the one big area we focused on because we knew that that was a really important area and a problem area for a lot of our merchants to be able to measure using a true multi-touch attribution model to be able to measure to the in-store sale itself. One of the benefits of Moneris and the type of payment data that we capture is that it doesn't actually have any personal information in it. When we get the point of sale transaction information, besides the card number, which is just a 16-digit number that we further tokenize on our side, we actually don't know who the cardholder is. We have no way to link it back to the person itself. And because of that, it actually is an advantage for us from a privacy standpoint, because we can never tell who the actual person is. We were able to take this data and we invented a way of actually linking it all the way to the online activity of the person and the devices of the person. So rather than me speaking and telling you about it, I'll just let you watch the video. It'll tell you what it is, and it'll explain to you how it works generally, and then I'll close it off there.
As marketers, we want to target the right audiences and prove a return on our ad spend. We invest heavily in online analytics tools to help us understand the customer journey and track online sales. But did you know 90% of retail transactions still occur in store? And it has always been a challenge to connect digital advertising spend to in-store sales. Until now. Introducing DCA-CardLinx, the new multi-touch attribution analytics tool from Moneris. DCA-CardLinx measures the impact of your digital marketing activities on driving sales both online and in-store. That means you get actionable consumer insights to help you make data-driven decisions. DCA-CardLinx can help you answer long-standing questions like, which online marketing channel generates the most revenue? Which stores see the most traffic coming from your online marketing? And how do marketing channels influence your online and offline sales? Let's take a closer look at how it works. DCA-CardLinx uses standard digital tracking methods to trace the customer journey from digital ads to your website. Next, DCA-CardLinx anonymously links user devices to payment cards that process through Moneris' large network of merchants. Then, DCA-CardLinx uses a multi-touch attribution algorithm to connect your digital marketing and website visits to both in-store and online transactions. Lastly, DCA-CardLinx uses your Moneris merchant account data to measure consumer spending. So you'll finally have a tool to help see just how successful your marketing spend is at driving consumers not only online, but into each of your stores. DCA-CardLinx, the analytics tool you need to connect your digital advertising spend to both online and in-store sales.
So we're really excited to have launched DCA-CardLinx, and so far it's been really an interesting journey. We've got a long roadmap, and so what we launched is just the start, and we've got a long way to go. There's a lot more features that we're working on to try and introduce into the market to expand DCA-CardLinx into a variety of ways. And so I'll end it right there. Thank you.
Great job, Sanjeev. Please have a seat. Really fascinating presentation. And we've known each other for several years, actually. And I remember when you had just started, you just left internal audit, and you were now launching the data business from Moneris. It was very, very exciting. And we compared notes, I remember, because in a prior life, I ran the data analytics business for First Data, another large payment processor, which is no longer, now it's part of Fiserv. And the first question I want to ask you about is about that fundamental pivot that you made, right? So if you think about a payments processor, the client at a merchant is typically the treasury department, right? Because the revenue's coming in through the card tills. And so, most merchant payment processors have great relationships in the treasury department. But the data that DCA-CardLinx provides is actually most valuable not to the treasurer, it's actually to the chief marketing officer. That's right. So my question is, as you made that pivot, how did merchants all of a sudden react to, hey, Moneris is actually giving me data that helps my marketing effort? How did that conversation go?
And that's a great question.
Yeah.
And it was a bit of a challenge. At Moneris, we're known as a payment processor, and so this was a little bit of a leap in comfort for us as well. We're known to be very innovative, and I think a lot of merchants appreciate that, and they understand that. But it was taking it a bit outside of what we're typically used to. And so, our salespeople even, our connections are directly with the finance teams at merchants. And so now being able to connect with marketers and have that conversation and being able to convince them that, what we're providing you, we are not just specialists in payment processing, but we can actually leap into other areas that'll help you do that. I think a large part of it also what helped us was working, we did a 2-year pilot with a very large retail bookstore, Indigo Books, and they were an amazing partner for us because they were very open to working with us and helping us through that journey, and they gave us the feedback. So even though it is in a different area within the marketing departments at merchants, what we find is that they're more than willing to help work with us, to help us understand their pain points, because they realize the value of the payments data we have, and if we're able to link their payments data with their online activity in a meaningful way and provide those insights, that's very useful to them. And it's not just with online activity and with off-links, it's true with any of the other types of insights that we can provide to merchants. We've had data analytics teams now approach us, such as through the City of Toronto's, the King Street pilot, or we've even had merchants ask us, can you provide us better customer insights? Information about share of wallet, or how far do customers need to travel to come to our business, or even things like where do customers spend before and after they come to us, because maybe that gives us insights of what products we need to stock so that they don't need to go elsewhere. Those are things that we think about and we look at. And so, Offlinks is definitely one of our products, but our team is constantly working with different types of customers outside of the finance teams themselves to try and help them with those pieces as well.
Excellent, excellent. And at some of our conferences, especially last year, one of the sort of global trends that we were seeing is that the line between a payments company, a merchant, and an advertising platform were being blurred, right?
Yes.
They're all becoming basically one gigantic industry, and companies like Alipay you mentioned are a perfect example of that. They're all those 3 things. Amazon is another one, and so what you're saying is actually merchants want to work with whoever can help them be more competitive, including their payments processor, which is really great news.
And anyone who can solve their problem for them. One of the advantages of Moneris also, and the way they look at us, is we're independent. So when we provide measurement analytics around marketing, we don't have an ad platform. We don't have any incentive to show one platform being better than the other, whether it's Google or Facebook or any of the other different platforms that are out there through which they advertise. We're totally independent from that. So what we're going to show them is an objective view. And so anytime we can help them solve their problem objectively, they're happy to work with us on that.
Excellent, great news. So second question I have, and then we'll open it up to the audience, is you've got this amazing data, right? I mean, you just see, and especially in light of your market position in Canada, you probably have more insight than the Canadian government on what consumer spending is at any point in time. A lot of the companies in this room would love to partner with you in monetizing that data and creating new value-added tools for merchants, for consumers, for publishers. How should they think about partnering with you to do that?
It's another good question, and I'll split it into 2 parts. First, let's talk about if you have a solution that you're thinking of maybe partnering with us on. We are very open to partnering with people. In fact, we have a whole department that just focuses on partnerships. I tend to get a lot of requests on a daily basis for people, where people want to partner with us. And I'll tell you how I think about when I get these requests. The way I think about it is really 3 things. is it desirable? So is it solving a problem of my merchants, and is it solving a problem even for myself in terms of whether it's an Offlinks platform? How are you solving that problem for me? So is it a desirable solution? Is it feasible? Because let's be honest, we've only got limited IT resources. Our IT guys are swamped with thousands of projects. If yours is a solution that will require us to do any sort of heavy lifting, our ability to prioritize that over all the other work we're doing, to be honest, it's not going to happen. So we have to see, is it something that's feasible, and can we win in that space? You know, what's the point of doing it if you can't really win in that space? And then lastly, is it viable? You know, is there a business case for it? How are we going to make money out of this, and how would we monetize this? You know, if there are lots of players in this ecosystem, what portion would we make, and does it really make sense for us? That's on one side of it. You know, the flip side of it is, yes, we do have a lot of data, and you know, we're happy to work with various customers or partners on helping them if they're trying to build their platforms by providing the data. But I will say that at Moneris, we obviously can't give our raw data away, and that's something we won't do. But what we do is we do work with you to see, you know, is there a problem that we can solve with yours? Can we run the analytics on our side and give you the analytics results that you could then take and further your product with? So we're open from that standpoint as well. And my team works with a lot of customers, and they'll usually approach us, and we'll try to understand their problem and see, can we design a solution for them where we can provide that data to them. And as long as it meets certain thresholds and certain privacy thresholds and aggregation levels, we're happy to do that.
You're happy to do that. And I did say it was my last question, but I'll ask just one, because you raised an important issue, and then we'll open it up. If you have the consumer's consent and you have the merchant's consent, so typically it's going to be a loyalty program where the consumer says, I opt in, and then the merchant wants to drive loyalty, but they have a third party that's doing the analysis and the targeting, et cetera, which is very typical actually in a CardLinx program sponsored by a merchant. In that case, where you have the consumer consent and the merchant consent, in that case, will you provide data, or I mean, I know it's tough to say it on a blanket basis, but is that something at least you consider doing?
Again, if that's something that, because remember, Moneris is the custodians of data. We don't own this data. If it's, and it's really questionable who really owns that data. Is it the merchant or the cardholder? Yeah. Separate topic. Yeah. But for us, if it's the merchant's data that they're asking us to provide insights on, and they've got the consent of their loyalty cardholders, then absolutely we'd work with them on doing that. Okay, yeah. Okay. And is that a platform that you actually have, or do you have to do it on a case-by-case basis? Right now, I would say, and the reason, you know, we are looking at building it out on platforms, but what we've found is that typically the large merchants that have approached us, the requests that they have and the problems they're trying to solve are very unique to them. Mm-hmm. And so for us to create a standardized platform wouldn't necessarily work. So it's much better and more effective and provides more value to the customer if we do it on a more consultative basis, where we try to understand their specific needs. And then we look at, do we have the right data set to be able to provide that kind of information? Over time, and if we find that the requests are all similar and can be standardized, we'd absolutely love to put it on a platform, but so far it hasn't really worked out that way. Got it. Great feedback. Let's open it up for some questions. Jennifer in the back there.
I really enjoyed your presentation. It was definitely enlightening. I had a question regarding sort of the flavors of CardLinx programs. And I'm not really talking about sort of, you know, general consumer use versus issuer, but more around whether once you've enrolled a card in a program, that you're then part of that loyalty program and you get any merchant offer without additional action, or when you're in a scenario where an offer activation, or, you know, basically adding the offer to your card is required. Whether you have any point of view, whether you, especially in Canada, have enough data to know, you know, what's more compelling for merchants, and just generally your point of view on that split.
That's an interesting question, and the simple answer is no, not yet, because we just launched Offlinks. The interesting, if I'm to interpret your question correctly, it's do people who've signed up for loyalty programs, is their behavior any different than those who don't? And right now we're measuring across all of these channels, but we don't have that view yet as to whether the behavior of those who are coming from, who've signed up and are getting these offers is different. One thing Offlinks does do though is, if the merchant has carved out that as a separate channel, they can drill down, and the way we've designed Offlinks is it's very interactive, and it's an immersive experience where you can really click and drill down into any of the channels, into any of the stores, and so you can even see what the average spend is for a specific channel. So if they drill down into, say it's an affiliate program in the affiliate channel, they can actually see what is that average spend relative to the total spend generally of customers, and so they do get those insights through it. Do I have an aggregated view of that? No, not yet.
Sorry, I may have not stated my question completely
sorry.
correctly, and I have a feeling it's still sort of a TBD either way, but I'll be very explicit. So for Rakuten In-Store Network, in addition to someone adding a card to a program, we also require that someone actually link an offer to their card, as opposed to, say, for instance, the biggest dining in-store cashback programs in the United States. It's, for lack of a better term, passive. When you enroll your card in the loyalty program, you then can go to any restaurant, and there's no need for there to be a specific interaction with a brand, I guess, is what I was thinking about. And I think it's still probably too early for you to know whether, with those flavors, I mean, we have our opinion, which is that based on our experience with merchants, they want to see that direct attribution and see that somebody actually interacted with their brand versus it being you happen to be in the loyalty program. But yeah, so maybe it's more something for you to think about as you're looking at the data to get an understanding of what's most persuasive or can drive maximum return on ad spend for merchants.
Sure. Yeah, I would say it's probably to be determined. What we are measuring, though, is the interaction and engagement of a consumer directly with the merchant site. It's in fact the reason why we decided to first focus on visits to a merchant's website, because to us, it shows that intention of the customer by them going to the actual site, by clicking on an ad, by clicking on an email. And so our first point is to look at just those who are interacting with the site itself. Now, whether they've actually got an offer attached, that we haven't got to that stage yet, no.
And Jennifer, your question is one we hear all the time around the world, because what we're seeing is really a transition from a traditional model where it's much more based on impressions. That's the world of Facebook, that's the world of Google, and moving now much more to click to activate. Like, I went to your website, I added an offer, or I opened up my mobile banking app, I saw the offer, I had the impression, but in addition to that, I took affirmative action to add this offer to my card. And what we're seeing, generally speaking, is a very rapid move away from impressions to actually affirmative opt-in. I added this, which is a much higher signal of intent, and merchants really like that. They want that. They'd rather pay for that than just an impression. What's also interesting is it's obviously very consistent with the way the regulation is going, right?
That's right.
Where the consumer has to opt in. Any other questions? Any other questions in the audience? Yes, we got one right over here to the right.
Hey, this is Arjun from RBC Ventures. This might be a little specific question, but based on your experience working with merchants, how important do you think is competitive benchmarking data? Like, for example, a coffee store wants to know how is the store next door doing? That's number one. And number two is, how important is SKU level insights? And are you able to generate that with Offlinks?
Right. Both really good questions. On the first one, absolutely. We've had lots of requests, and we do provide insights in terms of how they benchmark to peers or to the industry. I mean, that's really important. I will say that, I mean, in terms of benchmarking against the guy next door, probably we wouldn't do, because that would be against our confidentiality thresholds. So we do have certain minimum requirements, but As much as possible, we try to take the data as granular as we can. So if not down to a postal code area, we would go down to an FSA level and show them how they would be performing relative to other businesses within their industry category itself, as long as that FSA carried a minimum number of merchants and no one does more than X amount of volume in that area, so you can decipher who it is. Definitely useful insights for a merchant. On your second question about SKU level data, again, yes, there's a challenge with SKU level data. Merchants definitely want product level insights. The problem is that we don't get that data through the point of sale terminal. SKU level data is something that merchants we find typically are not willing to give up. So they won't send it to us directly, or at least we haven't asked yet. Maybe they will. The other problem with SKU level data is a lot of them come with unique IDs that are unique to that merchant, and so tying it across merchants, using some sort of a universal product code or UPC code is a challenge. And ideally, you'd love to do that because then you can see it across merchants as well. So yes, product insights are useful, and if we had the data, there's so much more we can do with it. Would love to get it, but what we've seen is that merchants are a little bit reluctant to share that kind of information.
Any other questions in the audience? Okay, I think I hear some stomachs rumbling.
Yes, I'm
yeah.
not going to hold you
Right,
against your lunch.
Sanjeev, great presentation.
Thank you.
Thank you very much. Great job.